Welcome back to the Real Estate Playbook. I am hijacking Andrew's position on this channel. I'm going to be putting him in the hot seat because as a real estate agent, I'm just local here in Utah. There's some lending questions that I'd love to ask you and kind of see your thoughts and opinions. To start off here, one of the biggest things is we go under contract and then my buyers, okay, we're looking at furniture, we're looking at maybe they look at cars. What are the do not do this if you just went under contract to purchase a home? What are some things you should not do lending wise?
I'm on the spot now. So I'm going to touch on what you said first. So what you're referring to is opening up new credit, right? So anytime you're going to do anything with your credit, that's going to affect however your loan's structured. So to your point, looking at furniture, right? Most people, let's just be real, furniture is expensive right now. So most people, they're financing it on whatever, a charge-off account, or they're doing it some sort of way through RC Willey or whoever the place is. But anyway, when you do that, you're going to have a new credit hit on your credit, which that's slightly going to affect your scores. And then also it's going to affect your total utilization. So you're jacking up your ratios with your credit. So looking at cars, any sort of new credit that you're opening up, that's going to be an issue for you. It might not necessarily be a deal breaker depending on how your loan is structured, but for some people it is for sure. And then also that's on the front end of your loan in terms of when you go under contract. On the back end of your loan, you're always going to do a soft credit pull within 10 days of when your loan closes. So when you first go under contract, you're going to have a hard credit pull, right? It's a tri-merge. They're going to pull from every single credit bureau. But on the back end of your loan, they're going to do a soft pull. And they're basically going to see, hey, what have you done from then until now? And has anything in your credit changed? So that's a big problem. Because you have your financing appraisal deadline, which is when your earnest money goes hard, right? And that's when you can lose money. If you did something after that and they do the soft credit pull then, that could break your deal. That's a big issue. So once you're under contract, like I tell people, don't do anything with your credit really. Just let it idle out. Mm-hmm. Even if you have a credit card that you use for groceries or whatever, or just regular living expenses, that's fine. But I prefer to stay off of that. Maybe just use your debit account, your checking account, something like that. Cause, I personally would have you side on the air of caution instead of, blowing up this whole thing. So open new credit, that's a big one. But I think probably more of a common one that happens for people, especially for first-time home buyers, is moving funds around. Moving funds around for their down payment, their total cash to close, right? Because from a bank's perspective, we have to validate and source every single penny and where it came from. So if you're moving money around and, funds are kind of tight for you and you're moving things around, you're basically moving around the cup, right? You know that game where you have 3 cups and you have the ball under there or whatever, and you're moving it. That's what you're doing. And basically the underwriter has to figure out, what are you doing with this money? Where did it come from? So I would say that's a big one. Moving the funds around like crazy, especially when it's in a big deposit. There's a bunch of things, but I would say those are 2 pretty big ones.
Okay. Well, talking about credit, I've heard some stories that, this hasn't personally happened to me, but I had you have this large credit balance and you actually pay that off and it drops your score. Can the bank forgive that? You pay off some credit and your credit score actually goes down. Yeah. What does the bank view that as? What do you guys think?
Yeah. I'm guessing in that situation, they didn't just pay it down and that's it. I'm guessing they paid it off and closed the account.
Okay.
That's probably what happened. Because so there's a whole bunch of factors that go into your credit really, but the 2 biggest ones are your credit history. So do you pay things on time? Yes or no? That's pretty straightforward. And the second one that you're referring to is your total utilization. So generally speaking, you want to use less than 30% of whatever your limit is. So you have $1,000 limit, you never want to go over 300, right? But ideally you want to be below 10%. So it's way more conservative than what people think. But I've just done it with my own credit cards on purpose to experiment. And yeah, your score will fluctuate like crazy. So you want to have your utilization as low as possible. Basically use your card, pay it off, use your card, pay it off, use your card, pay it off. You don't want to have these outrageous balances. But to your point, if you have this big debt balance, this big debt load, and you pay it all off and then close out the account, that will hurt you. Because one of the factors in your credit is time. Like time, how long have you had a credit? So
Yeah.
how long have you had the credit card? So for somebody who maybe had this credit card for, since they were 18 or something when they first got a credit card, and they're 27 or whatever, you just killed a big chunk of your time.
Yeah.
So pay it down, but don't like close it out.
Okay.
That makes sense.
And then, we're talking about, okay, the process of getting the loan. And a lot of people, prices are high. They're rate shopping, they're going through different lenders. And I know you always advise get the pre-qualification. Well, when should rates are always fluctuating. So when should you actually shop lenders? You go under contract, or you have the deal in hand, and then you get the numbers from lenders. Do you go beforehand? Because it's always good to get a second opinion. And if another person was pre-approved and they came to you and you could get a better rate, of course you want that. But if you're another, shoes on the other foot, you might not think the same thing. So when is the time that you should rate shop? When you should look at different lenders and try to form a good relationship with one?
Yeah.
Because ultimately rates, a point here, a point there, but definitely lenders should have a long-term relationship with their clients for refinance purposes. But
boom, that's a fat question. Where do I start with that? So maybe just to the stage here. So interest rates change every single day, right? I'm sure you're aware the stock market changes every single day. So does interest rates. So interest rates are going to change any day the banks are open. So every day besides weekends and holidays, bank holidays, rates are going to change slightly every day, because investors, what they're doing is they're buying mortgages, right? They're buying that debt to then earn the return on that debt. So that changes every single day. And from a lending perspective, from a home buyer perspective, from a shopping perspective, you cannot lock an interest rate until you have a purchase contract and you're under contract. Or on a refinance, you can lock whenever then, but that's a different story. We're talking home buying here.
purchase,
So on a home purchase, you cannot lock your interest rate until you're under contract. So everything before then is just he said, she said. Like they have this, and like it's not true. It's not locked. Okay. Once you go under contract, you get what's called a loan estimate, and that's what basically breaks down how your loan is structured. And every loan estimate is formatted the same exact way, except that it has a different lending company on there. So it's a uniform document. So it's easier to read for everybody.
Yeah.
But until you go under contract, you cannot lock a rate. So if you're with XYZ lending company over here and XYZ company over here before you enter contract, it's like, it really is he said, she said, because you can say whatever you want. And unfortunately, they don't necessarily have to disclose that. I don't think it's right. I don't think you should do that. But the reality is people do. And they don't have it disclosed because they don't legally have to. But in terms of when should you shop, to be honest with you, like, should you shop around? Yeah, maybe. But generally speaking, like most lenders are going to be very close in the ballpark. Now, if someone's like way past whatever quote is, that's a different scenario. But from what I think about from a lending perspective is like, it's so much more than the rate. I've got a buddy at different mortgage companies. They're like, Andrew, the value is not in the rate. And most people, they think rate's the only thing. But convenience, having your loan actually close, protecting your earnest money, like having a competitive offer, closing fast, efficiently, like making you do less paperwork on your end, like those are all things. Like, yes, the rate changes, but like if you're an eighth of a rate difference, you're saving like, 10, 20, 30 bucks a month. Obviously it depends on the loan amount, but it's not what you think it is. Especially when you start factoring in things like, do I lose my earnest money? That's a big deal. You could lose that because you went with a lower rate, but that team was not prepared and not professional to get you through. That's a big deal right there. Yeah. The other thing you mentioned too is if you're working with the right loan officer and their team, they should be monitoring your debt for the life of your relationship with them. So it should not just be a purchase the home and then I never talk to you again. You should have a loan officer who's helping you manage that debt and helping you essentially find cheaper money when it's available so you can refinance. So it's much more than just that purchase itself. It should be a long-term strategy. So you're not just, does that make sense?
Yeah, it
Because
makes
you're
sense.
creating a strategy here because like if you take on this massive amount of debt and even if the rates are different, like people's situation changes, life changes, like it's how do we manage that debt from there? That's really like when a loan
Yeah.
officer's job like really kicks in my opinion. But
Well, I'll tell you a personal story. You know, I was under contract on a home in Lehigh, and my clients received the LE, and we've already passed due diligence. Luckily, I'm still on top, so F&A. But the lender came on with all these. Here's these fees, like appraisal's already done, so they already paid for the appraisal. They look at the LE, and this is not what the lender had told me. So they're calling me. They're having me review it. Um, I think I gave you the opportunity to compete on that one. And that's, we're under contract. If
Yeah.
if they don't go with that lender, we're extending deadlines.
Yeah.
We're switching a lot of things up, which we can do to, anything to protect my clients. That's the number one priority.
Yeah.
We can cancel. We have the F&A. But you also say, when should you shop, rate shop? When should you lender shop? Who do how do you know if you're trusting the right lender
Yeah.
before going under contract?
Well, I think that word trust is really what it comes down to. Because yes, you can shop around and do whatever and all that kind of stuff. But it's really, you want to have a team that you trust that's going to take care of all this stuff before you even go under contract. Like, really, it is. Like, because at that point, once you're under contract, the ball is really moving, right? And pretty much everyone who's buying a home has some crazy things going on, right? They're moving from one house to the other, they're moving from an apartment to this. Like, you're scheduling the renter or the moving truck. Like, you're people are crazy. I mean, usually people are moving for some reason, right? They're increase their family size. Like, people have all these different things going on. So for you to be like messing around about $20 a month as you're under contract when you have all these things going on, to me, that's just kind of ridiculous. Like,
Well, this was thousands
okay,
in
yeah,
additional fees.
yeah, obviously that's a big deal.
Mhm.
But if that's the case, like, did you really trust that person from the beginning? Because if someone's going to help you and then all of a sudden nowhere blindsides you with fees, like, I don't know, was there any red flags before that? Like, you know what I'm saying? That's like ridiculous. And again, unfortunately, in the mortgage world, like I mean, brokers, lenders, banks are all a little bit different. But for some, if you're at a mortgage brokerage and things like that, you can disclose less. At a bank, they way over disclose. So there's different things like that. But I think trust is the biggest thing by far. If you have a trusted mortgage advisor, I mean, you should be knowing that like this is like they're going to take care of you and their rate should be like, I mean, obviously it's a factor, but it's not like the number one. If you guys have other questions like that, feel free to drop them down in the comments. I love answering them. Obviously you can tell I'm passionate about this and I'm passionate about helping people just like you who have the goal of trying to purchase their home and they just don't know how to get there, right? You have a goal. This is where I want to get to. Just you need somebody to help you, find your way on that path. That's what I love doing. I love helping those people. So if you have questions, drop them in the chat. If you have questions for Brad, put them down in the chat too. We'll get back to you. But until then, we'll see you next time.